Morning students, welcome to this discussion on audit. So today we plan to cover a couple of topics and the idea is to get into the revision as far as those topics are concerned. I would say interesting topics for today. Yeah, particularly this topic on group audit. So our agenda is going to be discuss around the group audit as well as internal audit. Okay. So I'll begin my discussion with group audit. Yeah. All right. So now, in relation to the group audit, so let's try to briefly understand some of the requirements related to audit, and then we'll get on to the requirements which are very specific to some of the components of the group audit as well. Okay. So now, what is a group, and what are the accounting requirements, or you can say what are the requirements in relation to the preparation of the financial statements. So I would say that becomes a very important activity to begin with. Why? Because till the time you don't have the complete clarity in terms of what is a group, how the group is required to be looked at, okay, what all components are going to be there in the group. So you will not get much clarity in terms of the audit. Yeah. So that's why as a first step for an auditor, what is going to be that? Auditor will have to understand about the group. Okay, it's like any other audit. For an audit, what do you do? At first place, you try to understand what about the entity. Okay, and that's how you plan your audit. So same goes with the group. Now instead of entity, because the idea is to audit the group, so that's why it becomes important for the auditor to understand the group. Yeah, and accordingly plan the audit procedures. Now, in relation to a group, let's try to discuss as to what will constitute a group. So now, when we talk about a group, so the group will be a company. We can say this company can be a holding company, right? Okay, so let's suppose there is a holding company, right? Now, why I'm calling this as a holding company? Because I just bring in a lot of companies within this group. Okay. Now, this company may have two subsidiaries. Okay. Let's suppose this is S1. So this is an Indian subsidiary. And we may have S2, which is a foreign subsidiary. Correct? In addition to the subsidiaries, the group may also have some joint arrangements. So let me just call it as a joint venture. Okay, let's suppose this is JV1. Okay, that's the name of the entity. And the fourth one could be an associate. So let me just call it as A1, which is an associate. So now within a group, a lot of companies can be there, and below these companies, for example, S1, for example, AV, there can be another set of companies, okay, which could comprise a structure. Now, as far as the audit is concerned, what do we need to check? We need to check that what is our entity, or in that particular case, what is this group? Okay. So for the understanding of this group, where do you go? You go to the accounting standards. Okay. Now, whether that is about Indian GAAP or Ind AS, okay, so you look at the relevant accounting standard. For us, Ind AS is something which is important to be looked at. So we'll be looking at the requirements of Ind AS. So now, in relation to a group, what will you have? You will have all of these companies, and when a company has got a subsidiary or a joint venture or an associate, so what will happen? So there will be a mandate. Yeah. So there will be a mandate on the part of the entity to prepare the financial statements of the group, in which this group comprises not only the holding company, but all of these companies. So you may say that all these 5 companies taken together, holding S1, S2, GV1, A1, this will constitute a group, right? So this will constitute a group. So that's why now holding company, okay, so this company, in addition to the separate financial statements, this company was required to prepare separate financial statements. So in addition to the separate financial statements, this holding company will also be required to prepare another set of financial statements. And what is that? That is what you call as consolidated financial statements, right? Or you can say the financial statements of the group. Okay, that's one and the same thing. Now, in case of this consolidated financial statements, now the question arises as to what could be the components. Okay, so now components, as far as these consolidated financial statements are concerned, so they are going to be same. Yeah, so can anybody explain now what could be the components in a financial statements? Over to you quickly. So in case of a financial statements, what all components you may have?
Subsidiary company, joint venture, associate.
Okay, so that is about the structure. So I'm saying when it comes to the financial statements, in a financial statement, what all components do you have? What are the components of the financial statements? Yes, anyone? What are the components of the financial statements? So we can say balance sheet is one, correct? Statement of profit and loss is second, correct? Yeah. Cash flow. Then you have statement of changes in equity, and of course notes and the accounting policies plus various disclosure requirements. Yes or no? So this is what you call as components of financial statements. I'm not talking about components of the holding company, components of financial statements. Now, same goes with CFS. In case of CFS, what are going to be the components? Can you tell me? For the CFS, what all components will you have? Over to you quickly. Anyone? In case of a CFS, what are going to be the components? So same way.
Balance sheet of the holding company, balance sheet of the subsidiary company.
Very good. So that's one.
P&L.
P&L. So that is what you call as consolidated. So instead of calling it as balance sheet of parent and subsidiary, you will call it as consolidated balance sheet, consolidated profit and loss, consolidated cash flow. Okay. So this, you can say there is a prefix which will get attached. Yeah. To same components which are there in case of any other set of financial statements. Clear? Now, this was briefly about the structure which you may have, briefly about the set of financial statements which are required to be prepared by the entity when it comes to a consolidated set. Now, this responsibility of preparation of CFS lies on whom? Holding company. Now, is there any way? Management. Yes, very. So management of the holding company. Okay, so eventually it's the holding company which has to prepare. Now, is there any option available through which S1 may prepare CFS instead of holding, S2 may prepare CFS instead of holding? No. Preparation of consolidated financial statements has to be done by holding company only. Okay, clear? No. Holding company is required to prepare CFS, but an exemption is available to the holding. Okay, so let's try to understand that exemption now. What is that exemption available? So what is this exemption? So let us just take an example. Let's suppose there is a company A Limited. Say it has a subsidiary B Limited. B Limited has a subsidiary C Limited. C Limited has a subsidiary D Limited. Okay. Now, in this case, C Limited being a subsidiary will be required to prepare the CFS, wherein C Limited will consolidate C and D. For C Limited, B is the holding company. A is also the holding company. For C, both of them are what? Holding companies. B is called as intermediate holding company. A is called as ultimate holding company. Right? A is called as ultimate holding company. Now, in this case, let's talk about this exemption. Now, what does this exemption require? It says C should not be listed nor in the process of getting listed. Okay, so there are two conditions. C should not be listed, should not be in the process of getting listed. Okay, third. Okay, so this consent should be available from A, from B for not preparing CFS. Further, either B or A should prepare CFS using the same reporting framework, which should be available in the public domain. Which will be done in this particular case. So B will prepare CFS, A will prepare CFS. The moment you have all of those four conditions fulfilled, what will happen? C will get an exemption. Now, what is the meaning of exemption? Exemption means C will get a choice. If C wants to prepare CFS, it can prepare them. There's absolutely no problem in it. But if C doesn't want to prepare CFS, that option will also be available to C not to prepare the CFS. Okay. So that's why please remember this exemption is optional. Right? This exemption is optional. Optional means if C wants, it can avail. But yes, this exemption or this options come with certain conditions. The conditions which we just discussed. Okay. Everyone clear? Any
Yes,
questions on this?
No.
Okay, very good. Now, there's one more sort of exception which is available to the investment entity. So we'll talk about investment entity slightly later with the help of an example also. Now, let's try to come back to the role of the auditor. Now, so far, some of these things that we have discussed, they were all about the management. Yes or no? They were all about the company because preparation of CFS, all of these accounting requirements, who will be responsible? Management only. Auditor will not be responsible for that, right? So therefore, if we talk about the role of the auditor, now what is going to be the responsibility of the auditor? Auditor will have to audit this CFS. And this audit of CFS will be done in a similar manner, the way any financial statements are audited, the way separate financial statements are audited. So that means auditor will be required to express an opinion. And this opinion will be separate to the one which the auditor will provide on the separate financial statements. Okay, so you can't say that the auditor will merge both the opinions on separate as well as consolidated. No, for separate financial statements, separate audit report will be given. For consolidated financial statements, separate, or you can say another audit report will be given. Okay, wherein all of those audit procedures in relation to consolidation, in relation to all of these entities will have to be performed, and all of those reporting requirements will be there on the part of the auditor. Okay, now next comes the question that if the auditor is required to audit the consolidated financial statements, so what does it mean? Means what additional thing will be required on the part of the auditor in relation to this audit of the consolidated financial statements. Okay, so let's try to understand some of those requirements. Now, for us to get on to the audit of CFS, now some important points which need to be looked at will again be related to the financial report or will again be related to the accounting requirement. Now, what does it mean? See, audit is very simple as far as this understanding is concerned. What do you mean by audit? Audit means you go and check as to whether the work is done in the manner it was required to be done or not. Okay, so if there is a particular manner in which the work is required to be done, auditor will go and check whether the work is done in that particular manner. Yes or no? Yeah. So that's what we understand about audit. Yeah. So in a very simple manner, can we say that? Yes or no? Yeah. Now, in this case, if we are talking about audit of CFS, and on the basis of this understanding about the audit that we just discussed, now what is going to be the important part? Important part will be to go back and to find out as to what is required to be done in case of CFS by the management. Yes or no? Because that is what the auditor will also check. Correct? Otherwise, what else is the auditor required to check? Correct. So now, for doing this, what I'll do is I'll just take you through some of the requirements related to CFS. Okay. And in those requirements related to CFS, but we will understand that it's largely about the application of Ind AS or the relevant accounting standard. Okay. So that's why if we have this understanding of the relevant accounting standard, okay, so some of our requirements will become quite simple. Let me just pick up all of these points one by one, and that's when you will get more clarity around. So just give me a minute. Let me just open one document through which we'll just try to understand all of these requirements. Okay. Now, if let's suppose we are talking about consolidation, what does it mean? It means if the company has a subsidiary, say this is H1, if the company has a subsidiary or two subsidiaries or three subsidiaries, okay, so they will have to be consolidated. Yes or no? As per the requirements of accounting standards. Can you tell me what will the basis followed for consolidation of subsidiaries? As per Ind AS, over to you. As per Ind AS, what basis do you follow for consolidation of subsidiaries? Can you tell me quickly?
Sir, we need to check the accounting. We need to check the accounting period followed and the accounting policies followed by the subsidiary and the holding company.
Okay, very good. What else will you consider?
Acquisition date.
Acquisition date. So there are a lot of points. Okay, but I think one important point which is about the consolidation approach happens to be what? Line by line addition. Yes or no? For subsidiary, what is the approach that you follow for consolidation? Line by line addition. Right? Now, if we talk about associates or JVs, let's suppose A1 is the associate, JV1 is the JV. Can you tell me under Ind AS what approach will be followed by the H1 for consolidation of A1 and JV1?
Equity method.
Equity method. Very okay. So both of these will be consolidated using equity method. So that's the approach that we follow. Correct? Now for some time, maybe for another 10 to 15 minutes, what you will find is that we will be discussing mostly about the accounting requirements. Why? Because as an auditor, what do you need to do? You need to check whether these accounting requirements have been followed in an appropriate manner or not while preparing the CFS. Yes or no? So that's why as an auditor, what do? What do you go and check? You check whether the subsidiaries have been consolidated using line by line or not, whether the associate has been consolidated using equity method or not. Yeah, it shouldn't happen that the management has consolidated the associate using line by line addition. Okay, so that should not happen. Yeah, because if that is the case, that could be a concern. Right? Now, as a next step, what is it that the management will consider? Management will have to consider a couple of points. Okay. If let's suppose we talk about
So auditor, management or auditor? Auditor, no?
no. So I'm talking about the management, not the auditor. Why? Because that's what we are discussing. That as an auditor, what do you check? As an auditor, you check what the management is required to do. Okay. So at the first place, what are we doing? We are checking what is the requirement on the part of the auditor. Yes or no? Because if we have that clarity, then we can check that. Correct? Clear? So it's all about, you can say, understanding the entity, or it's all about application of the required accounting standard while auditing the set of this consolidated version, which you will receive for H1. Okay. Now, while this consolidation will happen, let's try to understand as to what is going to be the approach. If let's suppose we pick up only H1 and the subsidiaries, let me just ignore the associates for the time being. So let's try to understand as to how the consolidation will be done. So I'll pick up a very simple, very basic example. So let's suppose there's a trial balance. Okay. Let's pick up the trial balance of few companies. Say this is H Limited. Okay, or H1, that's one and the same thing. S1, as we discussed, is an Indian company. S2, again, let's call it as Indian company. S3, let's call it as foreign subsidiary. Okay, say it's in US, right? Now, if you look at the trial, so there will be various assets, right? There will be various liabilities, and there will be various items of legal. Okay, so now, when the consolidation is required, so what do? As we discussed, because these are subsidiaries, so that's why line by line addition is required. Correct? So therefore, what do? You will add H, S1, S2, S3. But tell me one thing, that is it possible for the holding company? Okay, currently the management is there. Is it possible for the holding company to consolidate the financial statements of S3 as it is?
Conversion will be done.
Conversion will be done. Very good. So that means before this line by line addition, what do you need? You need financial statements of S3 in INR. Okay, so let's suppose this was available in USD, right? So this will have to be converted in INR as a first step. Correct?
And also we need to check the accounting period, what the subsidiary and the holding company are following.
Correct.
And,
very good. Very good.
Under the which accounting frame.
Very good. Correct. So there are a lot of adjustments.
Whether it is they are following the Indian ICAI or their gap. And
yes.
Also auditing, also how they have performed. Auditing, which framework the auditing is conducted by
Correct.
the holding company and the subsidiary company.
Absolutely right. Very good. So now, as an auditor, what do you need to check? So now, let's get on to the consolidation approach. Okay. Now, while the CFS will be prepared, a lot of adjustments are required to be done. Okay, so let's suppose a total is computed here. Okay, so let's suppose you have computed the total. In this total, a lot of adjustments are required to be done, which are also called as consolidation adjustment. What is the first adjustment? Elimination of intercompany transactions. Yes or no? Intercompany transactions for the balances. So that's going to be the first consolidation adjustment. Second, if there is any goodwill or capital reserve, whether that has been computed appropriately or not. Correct? Third, if there is any NCI, whether that NCI has been computed in accordance with the requirements of Ind AS or not. Yes or no? Fourth, now, if you look at the approach we just discussed, H, S1, S2, S3, if you consolidate all of them, okay, so it's important that their accounting policy should be aligned. If let's suppose H is following a different accounting policy, say FIFO for inventory valuation, S2 is following weighted average for inventory valuation, can you add these two? Tell me, can you add these two? Tell me, can you add these two? No, you can't do that. Okay, so that's why what do you need? You need alignment of accounting policies. Yes or no? So that's what the auditor will have to check. So all of these adjustments, who will be checking? What is going to be the role of the auditor as far as consolidated financial statements are concerned? So that's not only about to check whether H, S1, S2, S3, they are following line by line or not. Over and above line by line, all of these adjustments are required to be audited by the auditor. Yes or no? Now, another adjustment. When it comes to elimination of intercompany transactions, okay, so there could be some unrealized profit. Let me just add that over here. Yeah, if there is some unrealized profit, so that needs to be taken out. And similarly, a lot of other accounting requirements. Okay, further, it may happen. Okay, further, it may happen that because S3 is a foreign subsidiary, so that's why it is following a different accounting period. Correct? H1, S1, S2, they may be preparing their separate financial statements from April to March. S3 might be doing that from January to December. So therefore, what do you need? Alignment of reporting periods. Correct? Yeah. So an auditor needs to ensure that the reporting periods are aligned or not. If let's suppose reporting periods are not aligned, then the difference, if let's suppose that is Ind AS, 3 months is permissible. But within those 3 months, if there are any subsequent adjustments, those should have been incorporated by the company in the consolidated financial statement. That is what the auditor needs to check. Correct? That's what the auditor needs to check. Auditor needs to find out whether that has been done by the management or not. Yes or no? Now, what are the other adjustments which come to your mind, which the auditor needs to look at the time of consolidation? Over to you. Any thoughts? Quickly. See, it's all about accounting.
Intra-company adjustments, sir. Intra-company receivables and payable set-offs.
Correct. So that we have covered in this point number 1. Okay, all the companies which are there within the group, that we have covered. What else? So I think there is a very important point which is also mentioned over here. Just think about it. What is it that the auditor will have to audit? What does he need to? Yes, tell me.
Whether all the component of the holding company included or not. First, we need to verify it. Whether they included all the subsidiary, associate,
Okay.
joint venture, all these things.
Okay, very good. So that's one. So let me just write. Okay, components have been included or okay, but that's not an adjustment. So that's why I'm now removing this point. I'm saying as far as the adjustments are concerned, which will go into the CFS. So let me just help you on one more point. When the subsidiary will convert its financial statements from USD to INR, okay, right? So it's not necessary that subsidiary 3 will provide financial statements in INR. It may happen that S3 has provided the financial statements in USD only. Holding company is doing this conversion for the console level. Yeah, it's possible. So that's why what will the auditor be required to do? Auditor will be required to check the conversion. Correct? Conversion adjustments. Now, as far as conversion adjustments are there, so one aspect is, of course, about translating the financial statements from USD to INR. There's another adjustment which may arise. It may happen that the gap which S3 is following is different from Ind AS. Let's suppose S1 follows Ind AS, H follows Ind AS, S2 follows Ind AS, but S3 follows US GAAP. Possible or not?
Yes,
Yeah.
sir, possible.
So in this case, when S3 will provide the financial statements to the parent, so S3 will say, pick up my financial statements, take my financial statements in USD. It's under US GAAP, and any adjustment that you require, you do this at the corporate level, at the console level. Okay, so therein H Limited will convert the financial statement of S3 not only from USD to INR, but also from US GAAP to Ind AS. Correct? So the conversion adjustments, one related to currency, second related to GAAP. So who needs to audit that? That needs to be audited by the auditor only.
Sir,
Auditor of the consolidated financial statements. Yes,
sir,
I understand you have a query.
Sir, also we need to adjust the auditing house done by the Indian company and the foreign company. If
Correct.
the S3 is done by the as per the US GAAP auditing, then we have to work as per the Indian accounting standard framework.
Agree. Correct. So there are a couple of points. Now we'll talk about it. Okay. So this was something. Okay. So far, all of these points, we can say these points were related to the accounting. Yes or no? So if you look at all of these points, these were all related to the accounting. Yeah. Now, at a console level, other than these accounting adjustments, some more adjustments, or you can say some more audit procedures may be required to be performed. So let's talk about it. Okay. Of course, I'll come to the components. I'll come to the approach of the components slightly later. As of now, my focus was more about how do you process this consolidated financial statements from the management perspective. That is what we have discussed. And alongside, we have also understood that whatever management will do, auditor will have to check. Yes or no? That's the role of the auditor. So that's why auditor needs to have this complete clarity. What is the management required to do? Okay. Now, next. In relation to audit. Now, if you look at this company S3, again, this company may have a problem. What is the problem? See, Indian entities, H Limited, S1, S2, they may be following auditing standards which are applicable in India. Correct? You can say audit framework, which one? Which is there in India. Correct? But when the financial statements of S3 will be provided to the parent, who is the parent? H Limited, for consolidation purposes. Generally, the management of parent will require that such a set which is provided by any subsidiary, whether it is in India or outside India, it should also be audited. Yes or no? Because if all of these financial statements are audited, then no further changes will be required. Some sort of comfort is there. Correct? Now for S3, other than these two problems, I'm calling these as problems. Why? Because these need to be fixed by the parent. So other than these two problems, one more problem could be there. What is that? When the audit report by the auditor of S3 is issued, it's under a different framework. Yes or no? Right? So in such a case, what will the auditor of CFS do? Auditor of CFS will have to consider all of those adjustments which may be required to be considered from such framework which has been used by the component auditors. That's a component. Okay, so this S3 is a component by the auditor of S3 as compared to the auditing framework which is applied for the audit of consolidated financial statements. Yes or no? Yeah. So let me just write one point, that when it comes to audit of CFS, okay, so what is going to be our step one? We can say that will of course be to check all of these things, all of these points, right? Because that's how the CFS are provided. Step two, or you can say another point, will be to look at the audit framework. Correct? Next, let's have some discussion around this audit framework. Now, what is this audit framework? What is this audit requirement? All of these things. Okay. So now, see, when it comes to the CFS, CFS is all about consolidation of various companies within the group. Whether you follow line by line, whether you follow equity method, we have also discussed that in all of these equity methods or line by line, different considerations will be there on the part of the auditor, which we'll have to consider, and accordingly he'll be required to apply all of those requirements in his audit procedures in relation to the consolidation. Okay, but in relation to consolidation, to begin with, okay, when the auditor will start the audit procedures in relation to the financial statements of the group, auditor is not looking at one entity. Auditor of the CFS. Okay, so now we are talking about auditor of CFS. Auditor of CFS will have a lot of responsibilities which are going beyond H1. Why? Because they apply to this group as a whole. Yeah, that applies to this group as a whole. So that's why auditor will have to consider all of them. Okay, so now in this case, couple of scenarios are possible. So let's understand those scenarios. Okay, say S1, S2, S3, and we have this A1 and J. Okay. So let's suppose PQR and company is the auditor of CFS. Okay. But for the components will prepare their own financial statements. Yes or no? Right? So all of these components will prepare their own financial statements. So now, for all of these components, it's not necessary that PQR will be auditing their separate financial statements. Correct? Some of these components may be audited by another auditor. For example, say A and company is the auditor of S1. B and company is the auditor of S2. C and company is the auditor of S3. Okay. Or let's suppose D and company is the auditor of A1. E and company is the auditor of JV. Of course, for parent, PQR and company is the auditor, as well as CFS. Now in this case, because the audit involves console, audit involves group. So that's why auditor needs to find out as a first step to begin with about all of these entities within the group in terms of their size, as to how significant they are in relation to the group. Because what is this group? Group comprises of 6 entities only. Yes or no? Yeah. So it may happen that S1 is quite significant on the basis of turnover, on the basis of profitability, on the basis of asset size, as far as group is concerned. S3 may be a very small company. Correct? S3 may be a very small company. Again, as far as the size of the group is concerned. So at the first place, auditor needs to evaluate all the entities within the group. So this will be called as parent, and S1, S2, S3, all the companies which are going to be consolidated, they are called as components. Okay, so all of them are called as components. So PQR will be called as parent auditor or console auditor. Okay, and A1, A and company, B and company, C and company, what do you call them as? Component auditors. They are all component auditors, means they are the auditor of components. Now, is it necessary that the auditor of component has to be a different audit firm? No. It may also happen that all the components, including the parent, are audited by the same audit firm. Yeah, both the situations are possible. But depending on the type of situation that you have, again, some of the procedures on the part of the auditor will vary. So that's one. Now, depending on the size of the parent, now what will happen? Depending on the size of the parent and the component, auditor will determine the materiality. See, now the auditor is planning the audit. So auditor is thinking about the group. Auditor is looking at the size of the companies. So auditor will be designing his audit procedures. Okay, what all things are important, what all things are not so important, which entities are material, which entities are not so material, right? So auditor will determine the materiality. materiality which will be applied on CFS. So please remember, this entire approach is all about CFS now. Now, within the CFS, there's not one company. There are 6 companies, correct? So that's why this materiality which the auditor will compute for the CFS now needs to be distributed amongst the various components, including the parent. Why? Because when these entities will be audited individually by the respective auditor, so such materiality which the parent auditor will compute will have to be used by the component auditors. For example, say PQ&E has computed a materiality of, let's suppose, rupees 3 crore for S3. Why? Because PQR is looking at the CFS, and considering the CFS, rupees 3 crore is considered as materiality amount to be allocated to S3. Okay. In this case, what may happen is, when the auditor of S3 C&E audits S3, so C&E is not looking at CFS. C&E, this component auditor, is not looking at CFS. Yes or no? Yeah. So in this case, C&E may think that for S3, materiality should be 50 lakhs. Yeah. So for a standalone level, C&E may think the materiality should be 50 lakhs. Okay. Now the question arises that what materiality should be considered by C&E? If, let's suppose, C&E considers the materiality of 3 crore, is that incorrect? Answer is no, that's correct. But that is relevant only for group audit purposes. For the audit of separate financial statements of S3, what materiality will be considered by C&E? 50 lakhs. And in case C&E decides to use 50 lakhs as the materiality even for group audit, will that be a problem? Why? Because the materiality cannot exceed the one which is provided by the parent auditor. It can always be lower than that. Okay. So what we can say is, this 3 crore is the upper limit. Okay. But the component auditor, if it wants to go down, there's absolutely no problem in doing that. Clear? Clear so far? Any questions so far? Over to you quickly.
Sir, yes, sir. Whether the parent company auditor on the consolidated level, for the each component, he will fix the material for each component separately or the consolidated manner, sir?
No. So the parent auditor will first of all compute the materiality for CFS. Okay. Now this materiality which the parent auditor will compute, now this will be distributed amongst various components.
Sir, I am
what
asking.
Does it mean?
Sir,
that means it will be computed for each component separately.
Okay, sir. Got it.
Okay. To answer your question, will that be separate for each component? Yes. Okay. Yeah. But how do you do this? So approach is compute this at CFS level first. That is what you distribute. Okay. Now, as far as materiality is concerned, we have discussed. As far as CFS are concerned, we have discussed. So this is the approach which the parent auditor will consider. Now, in this case, Depending on the audit approach, depending on the audit materiality, depending on the size of the components. Another thing, parent auditor will plan. What is that? Audit procedures to be applied by the company. Now, please remember, all of these component auditors, they will be working as per the instructions of parent auditor. Parent auditor will instruct them how the audit of component is required to be performed for the purposes of group audit. Now you may be thinking, but sir, how is that possible? Why? Because A&E company is appointed by S1. So A&E company is responsible to provide the audit report to the members of S1. So how can parent auditor give the instructions? Because two audits are different. A&E company will do the statutory audit of S1. That's separate. A&E company will also be providing another audit report for the purposes of group audit only. And to whom such audit report will be provided? So this audit report will be provided by A&E company to PQR and company. So A&E company will not give this audit report to S1 or to H Limited. No, that will be sent to PQR and company. Of course, the fees and all, appointment on all of those things would have been covered by the management. But the group audit report goes from the component to the group auditor or the parent. And that's why parent auditor sends a complete list of instructions to every component for performing the procedures in relation to such component audit. And in some of the cases, what the parent may decide is, so parent may say S1 is important. Why? Because it's significant. So that's why its scope will be full audit. But for S3, because it's immaterial at the group level, so the parent auditor may decide that audit should not be performed for S3. Only the analytical procedures may be performed. Okay, or a review may be performed instead of audit. All of these things will be decided by whom? Parent auditor. Okay, so all of these things are required to be decided by whom? Parent auditor. Clear? Now, in this case, depending upon the structuring which is there, structuring in terms of who is auditing which entity, we are looking at a situation wherein all the components or some of the components are not audited by the parent audit. Okay, so that's why what will happen? That's why when the parent auditor will issue the audit report on CFS, please remember, when the parent auditor will issue the audit report on CFS, parent auditor will clarify in his audit report that all of these components, okay, S1, S2, S3, A1, JV, they are not audited by the parent audit. They are audited by some different audits. Of course, this audit or any work is done as per the instructions of the parent auditor only. There's no doubt about it. But still, it's not audited by the parent auditor. Now, at some places, what may also happen is, because the audit of the components has to be done as per the instructions of PQR. So that's why PQR and the component auditor, they need to stay involved. They need to interact with each other. Okay, they need to stay engaged in terms of how the audit is going on, what all procedures are required. Okay, if there are any observations, those need to be discussed so that they are closed in an appropriate manner. Further, if there are any reporting implications which S1 has planned, let's suppose S1 plans to qualify the financial statements. Yeah. So all of these things need to be then assessed by the parent audit. If let's suppose S1 has qualified the financial statements of A&E company, then PQR will assess at the console level whether that qualification is important at the group level or not. Okay, so that's how parent auditor will consider his approach as far as audit of group is concerned. Clear? Yeah. Now, depending upon the type of involvement which the component auditor may have in relation to the group or in relation to some of the group components, we can say different situations could arise. So what we will do is we'll also talk about all of those situations one by one as we move further. So now what I'll do is I'll pick up some questions. Okay? We'll just try to discuss some more aspects as around the audit with the help of those questions. Fine. Okay. And I would suggest everyone please participate in that and you need to answer that. Okay. So now. All right. So let me just get on to those questions. Just a minute. All right. So if you look at this question number 2, A Limited holds ownership of 10% of voting power and control over composition of board of directors of B Limited. While planning statutory audit of A Limited, what factors would be considered by you as statutory auditors of A Limited for the audit of its CFS prepared under Ind AS? Over to you. Over to you quickly. Yes, who will answer this?
Sir, actually, even though only the 10% of the voting powers
Right.
he has and the ownership of the A Limited, but he is
Right.
control. He has a control over the company.
Correct.
Then how much control he has on that company, we need to identify. Accordingly, we need to include it in the consolidation financial statement.
Okay, so that's first point. What else? So if let's suppose you were to answer this question in the exam, so can you just maybe not elaborate, but help me with the pointers which you will plan to include in your solution?
Then we need to check the harmonization of the accounting policies, elimination of unrealized profit. Then if it is a foreign subsidiary, then we need to check the foreign currency adjustment. Then we need to the alignment of the reporting period if it is
Right.
more than 3 months.
Right.
Then elimination of intercompany transactions. Then all
Okay.
these things we need to consider, sir.
Correct. So that will be in relation to the audit of CFS, some of the procedures you will perform. Okay. But what else? I think there are some more important considerations that you are going to have as far as audit is concerned, considering this particular situation. Anyone else? If you'd like to add to this, over to you quickly. Yes, quickly.
So he will determine the materiality level.
Okay. So what does it mean? Can you please explain?
So he will determine what will be the materiality for the group as a whole, for the parent while performing, and that will be communicated to the relevant auditors, component auditor.
No, but we have only one component here. We do
Yes.
not have various components. Okay.
Yes.
Okay. What else? What else will you have? Anyone else? Quickly. Quickly. Okay, so let's try to understand as to what all things will be important. See, this is a very specific situation wherein the control is achieved through 10% voting right. Yeah. which is possible under Ind AS. Okay, so it's not something not possible, but this is something which is not very commonly found. So that's why in this case, what is going to be the important part? Auditor needs to verify assessment of the management of having control in billing. So that's going to be the first step and the most important part. So when the management says there is a composition of the board of directors through which the control has been exercised, so the auditor needs to pick up the minutes of the board meetings. Yeah. So the arrangement which is there, how the decision making is done. Okay. So that control criteria that you have under Ind AS 110, which gives you three things. One, power over the investee. Second, exposure to variable returns. And then, of course, third, to influence the variable returns to the par that you have. So all of those criteria will have to be evaluated by the auditor. So that's going to be the most important aspect as far as this audit is concerned. Correct? Because if you do not do this assessment correctly, then this entire consolidation may go wrong. Okay, forget about those subsequent steps, line by line, intercompany elimination. Those are all, you can say, sort of, procedures wherein the team members may be involved. But this is one area which will involve the involvement of senior members of the audit team. Why? Because judgment is required to be applied in this case. Yeah, it's not going to be an easy assessment. Okay, so minutes needs to be looked at. If there are some shareholders agreements, those need to be looked at, or any other thing through which the management has been able to, sort of substantiate this. That needs to be looked at. Further, once the assessment is done, then of course we have a clarity. Okay, so if we have a clarity that yes, control is there, then the entity becomes the subsidiary, in which case line by line consolidation will be required. Okay, and when it comes to the line by line consolidation, therein again you'll have all of those procedures we just discussed. Yeah, so all of those procedures will have to be then looked at by the auditor. Another point could be in relation to the related parties. So the auditor should review information provided by the management identifying the names of non-related parties. Because through that listing, auditor will also get to know if there is any other entity, whether that should also be forming part of this group or not. Currently, they are only considering two companies, A and B. But what if C and D are also there, which are related and which should also get consolidated? Yes or no? Yeah. So all of those aspects therefore become important on the part of the auditor. Clear? Everyone clear?
Yes, sir.
All right. So let's look at one more question. Okay, so let's look at this question number 4. Okay, M Limited acquired 51% shares of S Limited on 1st April 23 and sold 25% of these shares during the same financial year, means 23-24. Okay. So beginning of the year, 51% shares are purchased. During the year, date is not told to us. Let's pick it up, say 15th of January next year, right? So during the same financial year, 25% shares are sold. And you can say that through such sale, control is also lost. Okay. M Limited did not prepare CFS for this financial year on the plea that control is lost and the control was temporary. Now, what is your thought? Do you agree with the management? Assuming that M Limited is required to prepare its financial statements under Ind AS. Over to you. What do you think? In this case, do you agree with what the management has done? Over to you, quickly.
Sir, as per Ind AS, we need to prepare the consolidated financial statement for the temporary holding also. We need to look
Right.
into the acquisition date, not that subsequent disposal. For the temporary period, we can prepare it. For next year, we can leave it.
Right. Okay. So in this case, you do not agree with the management. So what they have done is wrong. But
Sir.
tell me one thing. Okay, so let me just pick up the situation of the management. If let's suppose management has an argument, so they are saying that please understand, 1st April we acquired a company. Okay, let's suppose within 6 months, 30th September we sold the company. So it's 23, and this is 31st March 24. So when do you prepare the CFS? 31st March. Correct? Okay. But as at 31st March, there is no subsidiary. So they have an argument. So who would like to add to what I think Saminathan has explained? Over to you, quickly. In this case, what do you think? Over to you.
For the temporary period, we need to prepare the CFS, sir.
For the temporary period, we need to prepare the CFS. Okay, so now, see, when it comes to such type of situation, wherein the control is temporary, now again, as an auditor, what do you need to check? Ind AS. See, this entire discussion on audit will come down to the accounting standards broadly. Why? Because as an auditor, what do you check? Accounting standards, whether those have been applied in an appropriate manner or not. Correct? So in this case, important part is to check, is there any exemption which the accounting standard provides for not preparing the CFS when the control is temporary under Ind AS? Answer is no. Answer is no. Okay. So therefore, starting from the date when the control is acquired up to the date when the control is lost, consolidation will be required. Consolidation will be required. So there is no exemption which is available in this case. So therefore, consolidation will have to be done by M Limited. If M Limited is not doing that, then it's an error. Okay, so they need to do this, right? Okay, up to which date? Of course, they will do this up to 30th September only, right? So this consolidation will be up to 30th September only, but that is required to be done by the manager. Clear? Even clear? Any questions so far? Anyone?
And then separate financial statements will have to be prepared.
By M Limited?
Yes, sir.
Yeah, of course. See, whether the CFS is prepared or not, that's a separate consideration. Separate financial statements for all the entities within the group are a must, okay, when it comes to a company. Yeah. So that requirement will not go away. That will always remain. That has to be there. Right? Now, another question.
Yeah,
yes.
In addition to the separate financial statement, the component auditor should prepare the consolidated financial reporting and submit to the parent company auditor.
Are you talking about the subsidiary company?
Yeah. Subsidiary company need to prepare the separate financial report, auditor.
So what do you mean by
independent audit report for consolidation purpose separately and
okay. So now, if you go back to this particular example, okay. So there are a couple of things what you just mentioned. You are talking about S1, not A&COME. Okay. Now S1 will prepare its separate financial statements.
Right, sir.
Either the same separate financial statements will be shared with H Limited.
No, sir. Separately, for consolidation purpose, he need to prepare the separate financial statement and need to submit it along
So let's
with
understand
the audit report for consolidation purpose separately.
Correct. So let's understand that. Okay. So let's suppose we have H Limited and we have S Limited, right? H Limited prepares its own financial statements. S Limited prepares its own financial statements. Okay. And of course, financial statements of H as well as S will be audited, right? Now, H is also required to be consolidated by H. S is required to be consolidated by H. Who will do the consolidation? That responsibility is on H. So therefore, H will need the financial statements of S, right? So this financial statement for consolidation purposes will be provided by whom? S Limited to H. Now the question arises that can S Limited provide the same financial statements to H Limited? Answer is yes, it can provide. The only thing is that in this financial statement which S Limited provides,
If materiality and
no, so there's something else which I'm just trying to explain. Then I'll come back to your point. The only thing is that sometimes S may be following different accounting policies. So the parent may ask S Limited, please align your accounting policy, update your financial statement, and that financial statement you send it to me. Not this one. In some of the cases, H Limited may say that send the financial statement which you have, and I'll do all of those adjustments at the corporate level, at the parent level. Okay, so either of the approaches can be followed. It doesn't matter. Clear? Now, yes, over to your question. Now, what is your point here?
okay, sir. If the adjustment is done by the component auditor, then he need to ensure the accounting policies and the accounting policies and other related treatment and materiality given by the parent company. That also he need to consider in that S Limited component auditor. Then accordingly he need to prepare the revised financial statement according to the auditor report. He need to submit to the holding company.
Yes, you are absolutely right. So you can say if let's suppose
he is willing to correct, take the.
No, it's not about willingness. It's about the arrangement between the companies, between the group, H and S. So that's how it works. Okay. And all of these roles and responsibilities are agreed between the group. Yeah. So now
Yes,
what S Limited will do is S Limited may require some adjustments in the standalone, or you can say separate financial statement. So let me just call it as adjusted financial statements of S. So this will go to H. But please remember, S Limited is not providing the information to the parent auditor. Let's suppose the parent auditor over here is PQR and company, and the component auditor over here is say A and company. Now in this case, again, one will have to assess what is the scope of A and company. A and company, whether the scope of A and company is only the statutory audit of separate financial statements, or does it also include audit of component for consolidation purposes, which is generally there, Okay, but at times this scope may be picked up by the parent auditor only. That you ask them to provide the financial statements, adjusted one, will check that at the corporate level. Okay, so all of these things are agreed between the group. Yeah, and the same thing will therefore be required to be communicated by the group auditor to the component auditor as to what is the expectation of the group auditor from the component auditor, because component auditor will do what the group auditor will require the component auditor to do. Clear? Clear on this?
Yes, sir.
Okay, great. So let's come back to that point. I think we were looking at a next question. Okay, so now R Limited is a listed company engaged in manufacturing of round bars. Company is having investment in following components: 2 subsidiaries, 1 JV, 2 associate, 3 business entities under common control, interest in assets, liabilities, revenues, and expenses in a joint operation with one company, R Limited, and all its components are required to present their accounts as per Ind AS. While preparing CFS, R Limited consolidated all these components on a line-by-line basis by adding together assets, liabilities, all of this. R Limited seeks your advice on the accounting treatment. Now you may be thinking, but sir, this is an audit. So why do we need to comment on the accounting? And that's what I told you. See, when it comes to audit, it's largely about checking accounting requirements. Yes or no? So tell me, over to you. What do you think about the approach which R has followed? Do you agree with that or not? Over to you, quickly. Tell me, what do you think? Over to you. In this case, what should be the consolidation approach to be followed by R Limited? Tell me quickly.
Elimination of intercompany transactions.
Okay, what else?
And if there is capital reserve or goodwill, then they should be calculated correctly.
No, so if you look at the requirement of the question, so they are not asking you to elaborate on the consolidation approach. I think they have already done that. So they have already explained that this consolidation is done. The only point which they are asking you is that this approach which they have followed, is that correct or not for all the components?
Sir, line by line addition should not be done for joint venture and associated company.
Very good. So that's the point.
The business entity
So
moves to
now,
common controls. Only
correct. So now, if you look at the subsidiaries, for the subsidiaries, line by line addition is okay. But for any component which is other than subsidiary, this line by line addition approach is incorrect.
Equity.
Yes or no? Yes or no?
Yes, so equity method.
Yes, of course. Right? So to that extent, the consolidation which has been done by R Limited for all the components other than subsidiaries is incorrect. Yeah? Yes or no? Clear?
Yes. Yes.
Okay, very good. Now, let's move further. Let's pick up this next question. CAH was appointed as statutory auditor of MNL Limited. MNL is a listed company which has got 3 subsidiaries. MNL. Now, please remember there are 4 companies. 1 MNL, 3 subsidiaries. MNL. And they have also got 15 branches across India. Auditors are duly appointed for all the subsidiaries and the branches. What should be the considerations of CAH regarding determination of materiality during audit of CFS? how should he deal in his audit report if there are observations? For instance, modification, EOM made by the component auditors. Over to you. Tell me. Over to you.
Sir, the material, sir, for the MNL Limited, the auditor, he is a consolidated level, the parent company. He needs to determine the materiality for the MNL itself for the first one. Second one is that he need to fix the materiality for the component level. For each component, what is the materiality, and he need to inform to the each component auditor this materiality to be followed, and according to it, he need to prepare the financials and he submit to the parent auditor. And also, he need to ensure that the ethical requirement and independence of the auditor to be followed by the each component auditors.
Okay, very good. And what about this second question? How should he deal in his report as regards the observations raised by the component auditors? So what do you do?
He will disclose in the notes to the account of the CFS of the parent company when while he preparing it.
Okay, so let's understand this. Now he will have to consider the requirements of this auditing standard 600. Okay, which talks about all of these component auditors and all. Okay, wherein this approach of sending the group instructions, staying involved, all of these aspects will have to be considered by the parent audit. Computation of materiality for the purposes of issuing an opinion on standalone of each component will of course be done by each component and the component auditor. However, with regard to determination of materiality for CFS, what should the auditor consider? It has to be for the group as a whole, right? Parent auditor can also use the materiality computed on a group level to determine whether components' financial statements are material to the group, okay? And basis which he will decide as to up to what extent he can use their work. Parent auditor will also compute the materiality for each component and will communicate that to the component auditor, right? And of course, various other information, various other requirements related to the component auditor will be the requirement of the parent auditor. Now, as far as the observations of the component auditor are concerned, what will happen? In that case, this parent auditor should comply with the requirements of SA. Now you may be thinking, but sir, it's very generic. Okay. So there are two considerations which the parent auditor will have to get. One, if let's suppose component auditor has given an emphasis of matter. So does it mean the parent auditor should also include that same emphasis of matter in his report on CFS? Not necessarily. Parent auditor will evaluate that for the group as a whole, is that EOM still relevant? If yes, then parent auditor will take it to the audit report of CFS. If not, then at a group level, such observation, whether that is EOM, modification, anything which is there, may be removed, may be taken out. Clear? So that's how the parent auditor will deal with any observations which are raised by the component. Okay, clear on this?
Yes, sir. Clear, sir.
Yes. Any questions? No? All right. So now, along with this, now what we will do is we'll pick up one question which talks about different approaches to be followed. Okay. You are appointed as an auditor of Nawab Limited, a listed company, which is main supplier to UK building and construction market with a turnover of 2.9 billion Company operates through 11 business units and has nearly 180 branches across the countries. As an auditor, how will you draft the report in different situations? So let me just discuss all of these situations one by one. When the parent auditor is also the auditor of all the components. So in this case, when the parent is itself auditing all the components, so parent will not specify anywhere in the report on CFS that the component is audited by another auditor. Yes or no? Second, when the parent's auditor is not the auditor of the component. Okay, so this is the situation when the two auditors are different at two places. So that's where audit report on CFS will have this specification, means who has audited the components. Again, considering the size. So this explanation is covered. We'll talk about it as to how do you include. Third, when the component auditors report on the financial statements under an accounting framework is used, that is different from the parent. So that is where the adjustments are required to be done. Okay, and who will audit those adjustments? Parent auditor. When the component auditor reports under an auditing framework different from that of parent, here again, the adjustments will have to be audited by the parent auditor. Last, if some of the components are not audited, so that will again be specified by the parent auditor in his audit report on CFS, but he will have to evaluate whether these are material or not. Because if these are material, then the parent auditor may have to consider the reporting implications. For example, qualification, for example, adverse opinion, for example, disclaimer, depending on the size of the component. If the component is immaterial, then of course he'll only specify not audited and will not get into those implications. Okay, now in relation to the same point that we just discussed, another thing may arise that how should this be drafted? Okay, so if let's suppose this is required to be mentioned, so how do you really draft that? How do you really report it? So let's look at this question through which we'll look into that aspect as well. CAM is auditor of CFS of D&D Limited for the year 23-24. Consolidated financial statements consist of financial statements and financial information of 8 subsidiaries audited by other auditors. Such financial statements, financial information, auditor's report of subsidiaries have been furnished by management of D&D Limited to him. Following further information is also available in respect of 8 subsidiaries. Total assets are given, total revenues, net cash outflows. 2 of these subsidiaries are located outside India, whose financial statements have been prepared in accordance with accounting principles generally accepted in their respective countries. And which have been audited by other auditors under generally accepted auditing standards applicable in those countries. Now you need to comment where and how should such information be included in independent auditor's report on CFS. Also, you need to draft the suitable para by making necessary assumptions. So let's understand as to how this will be reported and how this will be drafted. So let's read this. Okay. So this needs to be captured in a section of the audit report which you call as other matter paragraph. Okay, other matter paragraph, right? Now, in this case, let's read as to what is the auditor trying to do here. We did not audit the financial statements and other financial information in respect of 8 subsidiaries, whose financial statements include total assets of 1500 crores. So where do you pick this data from? Question itself. As at 31st March 23, and total revenues of 1000 crore and net cash outflows of 10 crores for the year ended on that date. These financial statements and other financial information have been audited by other auditors. So first of all, he is including the financial information. Then he is saying these are audited by other auditors. Our opinion on CFS insofar as it relates to the amounts and disclosures in respect of these subsidiaries, joint ventures, and our report insofar as it related to aforesaid subsidiaries is based solely on the report of such auditors. So he's saying that I am just simply relying on those auditors. Okay. Next, he says two of these subsidiaries are located outside India, whose financial statements are prepared in accordance with accounting principles generally accepted in their respective countries. They have been audited by auditors under different auditing framework. Now, let's understand what is he doing, what is he writing. He's saying the holding company's management has converted the financial statements from accounting principles of those respective countries to that of India. Okay, so holding company has done this. We have audited the conversion adjustments. Okay, our opinion insofar as it relates to the balances, affairs of such subsidiaries is based on the report of other auditors and conversion adjustments prepared by the management audited by us. Our opinion on CFS is not modified in respect of our matters. Why? Because eventually that is the responsibility of the parent auditor only. Yes or no? Clear? Everyone clear? Yeah. So that's
Yes,
how
sir.
it is required to be reported. Yes. Any questions now?
Sir,
Yes. Please go ahead.
what is the net outflow of cash, sir?
Sorry.
What is the net outflow of cash? What is the
See,
cash net?
Okay. So there are three informations which have been provided. So this is about the balance sheet. This is about P&L. This is about the cash flow statement. Understood? So all these informations have been covered.
Sir, I'm
Idea
asking
is to
the,
just explain the size, that as
Sir,
far as consolidated financial statements are concerned, what portion of balance sheet, what portion of P&L, what portion of cash flow is not audited by the parent auditor. Okay? Clear?
Had there been some modification, qualified opinion given by the component auditor, then
Right.
how would it have been reflected in
Okay.
this?
Okay. So now there are a couple of things. First, if the component auditor, let's suppose, has given a qualification. So component auditor is auditing the component, correct? Now, let's suppose there are two companies, A Limited and B Limited. Now, it may happen that at a combined level, when you look at these two companies, so the qualification or the amount involved in respect of that qualification may not remain material at a
Correct,
group
correct,
level.
correct, sir.
So the first consideration and the part of the parent auditor will be to check whether he will go ahead with this qualification in the audit report of CFS or not. If no, then this qualification will be dropped at the console level.
We will not mention it.
No, we will not mention. Why do we mention? Because as the parent auditor, we have done our assessment. Why do we need to mention that we have done, say, 20 assessments during the year? Do you mention that anywhere in the audit? If you do not qualify, you don't mention anything, right? So same goes with such qualification also. But if let's suppose this qualification is carried forward, then of course, opinion will get qualified. So the opinion will become qualified opinion. The basis of opinion will become basis for qualified opinion.
Correct.
And the same language which you use for qualified opinion, you will replicate over there.
Correct, sir. Correct, sir.
Understood? All right. Any more questions?
no, sir, clear, sir.
All right. So then I think what we can do is maybe we can take a small break here. Okay, we are through with this group audit. Now, after the break, we'll pick up this next topic that is about internal audit. Right? Okay, so let's take a small break. I think 10 minutes should be good enough. Yeah. internal audit. Now, as around this internal audit, now what is internal audit? So we can say that it's all about checking the policies and procedures. Internal audit is unlike what you see in case of statutory audit. See, statutory audit is all limited to the financial statements of the company. Yes or no? But internal audit is not about that. Okay, so there is no real limitation which is attached to the internal audit. So let's try to understand some of the basic aspects around the internal audit, and then we'll just try to look into some further details around. Okay, so now, when it comes to the internal audit, okay, so now there's a definition which is provided around the internal. Internal audit provides independent assurance on the effectiveness of internal controls and the risk management process. Now, this is important to understand. Why? Because when it comes to the internal audit, so in a way, we are now talking about the entity. And we are not limiting this entity to its financial statements of the financial reporting only. It means the entity as a whole we are now considering. Okay, so there has to be an auditor who will audit the entity in all respects. So therefore, for an entity, for a lot of its activities to function in an appropriate manner, for all of its compliances to be running in accordance with the various laws and regulations which are applicable to it, what is important? A system has to be there. So every entity has to have a strong system in place. Correct? Now, what is the meaning of that strong system in place? Means, in respect of various activities, entity must have identified as to what can go wrong. Something which the statutory auditor also looks into. Yes or no? Statutory auditor also gets into this aspect. So here again, from the internal auditor's perspective, that is going to be relevant. But let's talk about the management first of all. So the management or those charged with governance, whether you talk about audit committee or the board of directors, they are responsible for this. They are responsible to establish, first of all, a risk management process. And for this risk management process, what do you need? Identification of the risks. Correct? If the risks are identified, against every risk, a control should also be mapped. Now, whose control is that? Is that the control of the auditor? The answer is no. That's not the control of the auditor. That's the control of the management of the entity, okay, which are called as internal controls. Okay, so they are nothing but the internal controls of the entity. Now, for all of these controls, for all of these identified risks, a process needs to be put in place so that each and every risk is mitigated as far as any activity of the entity is concerned. Number one. Number two, it's not only about documenting these policies, procedures, or the controls. Because of course, an entity may have a document wherein everything is put down, everything is written down. But what if that is not working in an effective manner? What if that is not functioning at all? Is that document of any use? Not much. So that's why when it comes to these internal controls, now whether those controls are operating in an effective manner or not. So that means it's important that those controls are effectively operating. Only then you have this risk management. Only then you will say that the risk which is associated with the different activities which will eventually form a process are covered. Yeah. So let's think about a process. See, if you talk about sales department, okay, or the marketing department, no, what are they responsible for? They are responsible for the sales. Yeah. If you look at this process of the organization, how does it work? Okay, so a lead is generated, a lead is then converted into a customer is then converted into the revenue, and that revenue is then collected. Yes or no? Yeah, so that's the cycle which is followed. Now, in relation to this cycle, or in relation to these 4 steps, these 4 pointers just that we looked at, there are hundreds of activities which will go behind it. Correct? There are hundreds of activities which will go behind it. Yeah. And if at any place there is some problem, then this entire function may fail. Okay, or its effectiveness may go down. So that's why after the management will put up this system in place, they need somebody who will ensure that the system is working in an effective manner. You can say it's a kind of review, it's a kind of check which the management needs to put in place. Now a question arises that if, let's suppose, such a check, such a control in the form of checking is required to be put in place, so can it not be performed by the statutory auditor? So what is your thought? Tell me. If, let's suppose, such a check is required to be performed, so can that not be done by the statutory auditor? Is that not good enough? Over to you.
He will be doing work. I mean, he will be performing the audit of the work which he himself has done.
Right.
The controls which were set by him, he will be reviewing that.
Okay. What else? Anyone
Sir,
else?
actually, the statutory audit responsible is only for the financial matters. For other operations like HR, how is functioning, and the other department, how is functioning, he will not look into those aspects. He will more particular about the financial activity, how's the internal control on the financial activities, what is the risk management on the financial activities. Only those areas he will look into it.
Correct. Very good. So now, if you look at the statutory auditor, okay, and if you look at this, sort of table which is given, what do you find? There are a lot of activities which the management may plan to get covered. For example, monitoring of internal controls. It doesn't say internal controls related to financial reporting only. Is there any such limitation? No. Okay, it is not talking about any such limitation here. Number 1, it talks about examination of financial as well as operating information, review of operating activities, risk management, governance. When it comes to the statutory auditor or the statutory audit, what is the limitation? It's limited to anything which will have financial impact as far as financial statements are concerned. For example, if, let's suppose, during the year, entity has got inventory, say on an average, this inventory balance was rupees 40 crore. Okay, throughout the year, entity maintained this inventory. As at the end of the reporting year, entity has got inventory of rupees 45 crore. Now, when it comes to the statutory auditor, the only concern which the statutory auditor will have is whether this valuation is correct or not, and whether this physically exists or not, and whether that has been appropriately included in the financial statements. Yes or no? But what if the management did not require this inventory throughout the year? Maybe they required the inventory on an average for rupees 25 crore. Okay, so the differential 15 crore of the inventory which the management has been holding throughout the year, is that not a wastage? Answer is yes. But is that going to have any financial implications as far as financial statements are concerned? No. So who is required to look into it? Somebody is required who will look into the operational aspects as well, and whose scope will not be limited to only the compliance or the insurance. Who will go beyond that? Who will get into more of an advisory role? Yes or no? What is the meaning of advisory? Advisory means you will do something which is beneficial for the company, which is more of a value add for the company. Correct? Yeah. So that's where another audit is required, that is called as internal audit. You can say it's slightly more detailed as compared to what you do in case of statutory audit as far as the scope is concerned. Okay. But of course, its coverage is significant because internal audit is not limited to financial matters. It applies to entity as a whole. Again, depends as to what the entity plans to do. Right? Now, why are we saying that depends on what the entity plans to do? Because when it comes to the internal audit, there are again a couple of problems. One, it is not mandatory for every company. So there's a criteria which is available under the Companies Act. Okay. Now, depending on that criteria, one needs to evaluate whether the internal audit is applicable to the company or not. So for the companies for which the internal audit is not applicable, they need to decide whether they want to get this done or not for their own benefits. But the benefits we have looked at as to why and how important is that. Even for the companies for whom the internal audit is applicable, they need to decide the scope. Why? Because it covers a lot of areas. So each and everything cannot be done in one go. So that's why it has to be decided as to what will be done over a phased manner. Right? So that's how internal audit is required to be looked at. Now, let's try to understand the applicability of internal audit. Now, if you look at the requirements of Companies Act, it talks about the applicability of the internal audit. Internal auditor can be an individual, can be a firm, or can be a company also, body corporate. Unlike a statutory auditor, there is no mandate that internal auditor has to be a chartered accountant in practice. Anyways, we'll talk about it. Okay. Now, what is the requirement for internal audit? Every listed company. Number one. Number two, every unlisted public company having paid up share capital of 50 crore or more, turnover of 200 crore or more, outstanding loan or borrowing for 100 crore. Okay, at any point during the year. Outstanding deposits of 25 crore or more at any point of time during the preceding financial year. Third, if we look at a private company, okay, so it has to be turnover of 200 crore or more, or outstanding loan or borrowing exceeding 100 crore or more. So now if you look at the public company vis-a-vis private company, what do you find? Scope is more, coverage is more when it comes to a public company. Why? Because public company is the one wherein the public interest is low. And so that's why it is considered more important. And that's why you will have a lot of exclusions from the private companies are concerned. Therein again, the risk aspect has been considered. Okay. Yeah. So now on this applicability of internal audit, yeah, will also pick up some questions. We'll just try to look at some of the requirements as we move further. But before that, okay, so now let's talk about another very important aspect. Now, who can be appointed as the internal audit? As we discussed, it can be a chartered accountant, cost accountant, or such other professional as may be decided by the board of directors. Okay. He may be an employee of the company also. Means it could be a third party or an employee of the company. To be effective, internal auditor must be regarded as part of management and not merely an assistant. Yeah, so idea is that one should understand how important this activity is. It is very, very important. You can say this is quite beneficial. And it's not only about benefit, it's also about an important requirement if the management understands it well. So that's why it needs to be taken in that spirit. Okay, generally what happens is, if you look at some of the companies, and if let's suppose internal audit is mandatory, so I'm just telling you the practical aspects. So internal auditor is not considered to be much of importance. Why? They may just think that it's a compliance, and once the compliance is done, so let's go about it, considering as if it's a compliance. So that's why we'll have to do it. But they fail to understand as to, there are a lot of benefits which are associated with that. So if this is not done in an appropriate manner, this is going to have an impact, right, on the functioning of the company, right? Moving further. Now, in relation to the internal audit, so there are a lot of activities which the internal auditor will perform. Here again, the approach of the internal auditor will be quite similar, which will happen in case of any other audit. You'll have to design the audit plan. You'll have to look at the activities. You'll have to look at the scope. You'll have to look at various processes of the organization. You'll have to get into the understanding. Okay. And again, on the basis of all of those aspects, internal auditor will get into different audit procedures. So now, what are the responsibilities which could be there? To ascertain adequacy of system of internal control, number one. To operate independently of the accounting staff. Not to involve in performance of executive functions. To observe facts and situations and bring them to the notice of relevant authorities. Now, who can be an authority? Board of directors. Audit committee could be an authority. Okay. To associate closely with the management, obviously, because without that, how do you get into a project like internal audit? And the most important aspect, internal auditor must be independent. Why? Because if, let's suppose, there is checking or examination of something is involved, that cannot be performed if the internal auditor is not independent. Okay. Now, in case of companies which are required to appoint an internal auditor, audit committee of the company, if let's suppose audit committee is applicable, or the board shall, in consultation with internal auditor, formulate the scope, functioning, periodicity, and methodology for conducting the internal audit. Okay. Yeah. If let's suppose it's not a company, so those who appoint the internal auditor, for example, owners could be there, promoters, board of trustees, again it's a trust, would generally define the objectives of the internal audit. Correct. So it's not something which is limited to a company. As we discussed that wherever it is not mandatory, okay, wherever it is not arising out of the requirements of the law, still it's considered to be an important aspect. Now, let's try to understand about the scope of internal audit. See, we have talked about it. That scope of internal auditor is quite wide. But still, if you look at some of the important aspects which are involved in respect of internal audit, now what are going to be that? Internal control systems and procedures. Yeah. Whether those are operating in an effective manner or various policies and procedures which are there, which the management has set up, whether a compliance for that is in place or not. So it's a review. It's a review. Okay. Review means examination. Here again, the objective of the audit is not to check each and every transaction, each and every sort of arrangement. Here again, internal auditor will also be doing the checking on a sample basis. Okay, for example, say a particular policy is given in case of HR, whether those policies are being implemented the way it's required by the management. So internal auditor may pick a few samples, may check its application. Okay. Yeah. In relation to various objectives which are there for the organization, the goals which are there, every organization will have some set objectives. They have some set goals in place, and they will have some steps to achieve that. Now, those steps are what? Those are again the processes or the activities of the organization. Okay. When it comes to the utilization of resources, for example, we talked about inventory. Similarly, if we talk about, say, for example, procurement department. Now, the procurement department may be too heavy in terms of the staffing. So they have got 50 persons, wherein only 40 persons are required. Okay, so maybe a downsizing is required in case of that particular department, or maybe some of the employees are not getting utilized in an appropriate manner. So all of these aspects which go beyond the financial impact, which is more into the operational aspects, are also required to be looked at by the internal auditor. Yeah, clear? And again, when it comes to the internal auditor, so the scope of the internal auditor is something which will be decided, which will be framed, and it's done in a phased manner. For example, internal auditor may decide that maybe in the first quarter he will review sales. Okay? Maybe in the second quarter he'll pick up the procurement. Okay? Maybe in the third quarter he'll pick up the payroll. Maybe in the fourth quarter he'll pick up, for example, financial reporting. Okay? So that's how things are required to be planned. So it's not something which can be done in one go for all the things. Correct. Now, as far as internal audit is concerned, there's one more aspect which is attached to that. So let's try to understand. See, when it comes to the internal audit, yeah, so internal auditor could again be, sort of, or you can have this structure of internal audit of two types. Now, this is again important. So let's try to understand this. Internal audit. Now, there are two ways you may find an internal auditor in an organization. And it's not about a large organization or a small organization. This is something which you will find in case of any entity. Yeah? Okay. And law doesn't specify any such thing. So don't think this is arising out of the requirements of the law. See, internal auditor could either be a third party. Third party means, say there is a firm or there is a company which is involved in these services related to internal. Okay. Means it's external to the entity. For example, say if A Limited has to appoint internal auditor. So what do? They have engaged a third party. So third party is, let's suppose, ABC and company has been hired. They have been engaged for internal audit. So in this case, What do you call ABC and company as? External, internal. ABC and company is the external auditor. External doesn't mean statutory auditor. Internal auditor is a third party. So that's why it's external. Another situation or another way you may find an internal audit or an internal auditor to be in place. That is by appointing or having an internal audit department in-house. Okay. Say A Limited has set up a department. That's an in-house department. Okay. Internal audit department, which is in-house. Right? This is what you also call as internal to the entity. Because this is not external to the entity. This is internal to the entity. Means this is very much within the entity. Now, in this case, some of the things which are important for us to understand. What is the role of the internal auditor? Can you tell me? What is the role of the internal auditor? Over to you quickly.
Sir, internal auditor to examine the internal control and the risk assessment process to enhance the governance and achieve the organization objectives.
Very good.
For the entity.
Correct. So in a simple word, we can say internal auditor is there to check something, to examine something. Correct. Now, for such a role, what is the most important ingredient? Independence. Yes or no? Independence is the most important part. Now I'm just also trying to explain you some of the challenges which you practically face. See, when it comes to an external party, for example, if you talk about ABC and company. So ABC is a third party. For a third party to maintain independence, will that be a problem? No.
No problem, sir. For maintaining
No
external,
problem.
no problem.
Right? So when it comes to an external internal auditor, independence will not be a challenge. Of course, you need to evaluate that. You need to ensure that independence is there, but that's not a challenge. But when it comes to something which is in-house, so what will happen? Say you have appointed a person as internal auditor, so that person will be the employee of the company or not? Correct? So he may be working in an independent manner. He may be not reporting to the management. He may be reporting directly to the audit committee, but still the independence may become slightly challenging. Okay. So that's why this sort of overlap as far as independent is concerned, okay, is something which becomes all the more important to be looked at in case of this aspect of having internal auditor. See, when you have external internal auditor, things are relatively easy. But when you have internal auditor, that is what you need to ensure. You need to have such a system in place so that the independence of the internal auditor is maintained. Clear? Yeah. As far as the companies are concerned, any entity is concerned, law doesn't mandate that the company will have external party only or in-house department. It's up to the company. In fact, some of the companies will have both. They will have their in-house internal audit department. They also hire a third party. Yeah. That is again dependent on the scope, expectations of the management, okay, how compliance is required to be maintained. So all of these factors are again what you see varying from one entity to entity. So there's no such fixed procedure or a formula, we can say, which is set. Any questions so far? Anyone? Any questions? Any doubts so far?
No, sir. But for the internally in-house or in-house internal auditor, the
Yes.
threat will be more like familiarity threat and the intimidation threat will be more on this internally appointed as well.
Yes, that's correct. And that's why it becomes all the more important for the system to be put in place that such threats are not there. Okay, so whenever the entity will get into this setting up of this, sort of in-house department, they need to ensure that all of those requirements which are there on the part of internal audit as well as the internal auditor, they have been put in place. Okay, otherwise what will happen? Its effectiveness will go down, or its effectiveness, you can say, will definitely be impacted. Now, what are the requirements? Yeah, so what are the requirements? Internal auditor shall be free from any undue influence. That's about the independence. Internal auditor shall be honest, truthful, person of high integrity. Correct? Internal auditor shall conduct his work in a highly objective manner. Yes or no? Yeah. So all of these things are very, very important to be maintained as far as internal auditor is concerned. Now, what are the qualities of internal auditor? See, internal auditor is there to examine something, and the management is there to perform, or you can say one is the doer, second is the checker. Okay, so if you understand about this concept of maker and checker, so one is the maker, second is the checker. For the checker to check something, it is very important that the checker has the requisite skill set, requisite knowledge, as well as the understanding of what the maker has done. So that goes similar to what you find in case of statutory audit. Yes or no? Because till the time auditor will not have a clarity as to what is required to be done, how is that required to be done, can the auditor really do that? Answer is no. It's very, very difficult to do that. Yeah. So that's why what is important? It is important for the internal auditor to have some basic qualities. One, expertise. So his knowledge has to be of high level. Okay. Further, because there are various areas which are going to have some financial impact, be it any activity in the organization is concerned. So that's why a level of accounting and finance knowledge on the part of internal auditor will always help. Operational knowledge, that's a must. See, the internal auditor is required to deep dive into the processes of the organization, for which operational knowledge is a must, right? And because the internal auditor is again involved in this audit activity, which is about managing people, dealing with people. So that's why his management skills, his communication skills are again very important. Confidentiality. See, audit is one activity which will always involve confidentiality, be it internal audit or statutory audit or any other audit. Yeah, so that's why all of these activities are the ones which the internal auditor always need to carry. Now, what are the steps? Of course, first step will be to obtain the knowledge of that particular area, that particular process, that particular activity. Try to understand the policies and procedures which are attached to that. What are the risks which are involved? What are the controls which have been put in place? Okay, and that's how plan the audit. And then, of course, pick up the required information, perform the audit procedures, and do the reporting. So we can say broadly, these are the 5 steps which you will find in case of any audit. Yes or no? And same goes with the internal audit. Further, when it comes to the internal audit report, Okay, so this is generally undertaken in 2 stages. Now, what are that? At the end of particular audit assignment, a report covering specific area which is prepared by the internal auditor highlighting key observations. Okay, this report is issued with details in which the assignment was conducted, key findings. Okay, to whom is this audit report issued? To the auditor, means the company. Okay, as agreed during the planning phase. Second, on a periodic basis, periodic could be a quarter, could be 6 months, means it could be half yearly, quarterly. So that's how it generally happens. Okay, which is about a comprehensive report of all internal audit activities covering the entity, the plan period. Okay, such reporting is generally done on quarterly basis or half yearly basis. So that's what you generally find in case of most of the organizations. Okay, and generally when it comes to the listed companies, so every quarter when this is done, so a communication, a meeting of internal auditor will also be taking place with the audit company. Okay, so wherein one sort of discussion will happen. Okay, so of course a detailed discussion will happen. Then the audit committee may also have some observations, may have some points. Okay, in terms of what all things are required to be covered, what all things have not been covered. Yeah, so that's how it actually goes on. Now, if you look at the audit report, so what are going to be the components? Of course, to begin with, objective, scope, approach. Okay. Then executive summary. See, internal auditor may have covered a lot of areas, and this report, let's suppose, is running into 40 pages. So every time the management or maybe the senior management or the audit committee may not have the time to get into each and every issue. So that's why this executive summary is prepared. Now, what is executive summary? You can say executive summary is a pointer which highlights the key areas, which are then further detailed out. Okay. As around the observations, corrective actions which are required, who will be involved in that? Who is responsible for that? What is the timeline for the correction? All of these things will always form part of internal. Clear? Clear on this? Follow. Now this follow. Now what is this follow? See, when let's suppose an internal audit is performed, say for June quarter, right? And let's suppose 20 observations were there in the internal audit report. So again in September, internal auditor will come, will check the same thing. Again, he'll pick up the same issue, same observation. Again, he will say that this needs to be corrected in the next quarter. Again, he'll come, say in the December quarter. So this cycle will go on. So this will keep moving on and on and on. Is that really the objective of the internal audit? Answer is no. Objective is to ensure that if there is any problem, if there are any gaps, those are bridged. And how is that possible? There has to be a follow-up. If let's suppose when the report was issued, a timeline was set up that within next 15 days, within next 1 quarter, within next 6 months, this problem will be resolved or action will be taken to resolve this problem, whether that has been done or not. Whose responsibility is that? Internal auditor. Of course, the management will also be involved in that, but the internal auditor needs to ensure that the action has been taken on the previous issues which have been raised in the previous report or not. Okay, and that follow-up is also discussed in the internal audit. Right? Now, as far as internal audit is concerned, internal audit and the statutory audit. Over here, this term external audit that you understand is about the statutory audit. Okay, so don't get confused by what I had written, external, internal audit. So this is statutory audit. See, internal auditor plays a very important role as far as statutory audit is concerned. Now, what is that? Because internal auditor will be involved in a lot of activities. review of various activities, review of various processes. So that's why some of the areas which the internal auditor will have picked up, some of the observations which the internal auditor would have raised. So that work in a way is going to help the statutory audit. Yes or no? Yes or no? So you can say internal audit is a kind of assistance to the statutory audit. Right? So that's why, what do you find? Generally, you find that when it comes to the statutory auditor will also have discussions with the internal audit. Or during the year when the scope of internal audit is set up, statutory auditor may also have some role to play. Why? Because he may also want the management or the internal auditor to focus on some areas which may have some implications as far as financial statements are concerned. So that's why these two parties, these two persons need to have a good interaction amongst each other. That's how internal auditor can support the external auditor, means the statutory. Now, does it mean that statutory auditor can just simply rely on the work of internal auditor? See, the responsibility of statutory auditor will be something which he cannot pass on to anybody, including the internal auditor. But yes, you can say in a way, there is certain set of activities which he is using, which is being performed by internal auditor for the purposes of his planning, for the purposes of his reporting required. Right? Now, as far as internal audit is concerned, so there is one more aspect to the internal audit. See, as we discussed that internal audit is more of a management function. Now, what do you mean by management function? It is more of advisory in nature. Yeah. So a lot of aspects in terms of value add, etc., is what you get to see in case of internal audit. Now, in relation to internal audit, another very important aspect is involved, and which is to a certain extent forming part of this financial reporting requirements also. Now, audit trail. Now, what is audit trail? Audit trail, you can say, is a kind of log. Log means log of evidences, which means, let's suppose during the year in the accounting system some changes have been made. Okay, any accounting entry has been deleted. Okay, so log will be created. Then say an evidence will remain. That is what you call as audit log. Now, for this audit log, for this audit trail, statutory auditor is required to specifically report in his audit report. Correct? Yeah. So now this could also be one of the areas which the internal auditor may be planning as a part of his scope. Yeah. These are more of the areas which are related to the IT environment of the entity. But again, as we discussed, that internal audit is not limited to the manual environment. It covers the entity as a whole. And these days, if you look at any entity, okay, so every entity that you find today is on environment which is based on IT. Yes or no? Yeah. So everywhere, what do you find? You have this IT environment in place. So there again, it becomes very, very important on the part of the management as well as internal auditor to look into this particular area as well. Right? So now once again, what we will do is we'll just try to pick a few questions, and with the help of those questions, we'll try to get into all of these aspects. Right? So now, just give me a minute. All right. So now, first one. Okay, so one of the independent directors sought information regarding the appointment of internal auditors for the following group companies as per Companies Act. So figures are in crores, correspond to the previous year. So you have this information available. XYZ, M&M, GFG. So you need to comment on which of these companies internal audit will be applicable and on which of these internal audit will not be applicable. Over to you. Yes, over to you.
Sir, for XYZ Limited listed company, so it's compulsory, mandatory for this inventory.
Very good. So XYX is first. Okay, being listed company, automatically it gets covered. Very good. So that's one. What about next? M&M.
M&M is not applicable, sir.
Okay, why not applicable? You need to go back to the same criteria and then assess that.
Sir,
Why no?
1 minute. It's
Yes,
applicable, sir. Share capital is more than 50
None
crores.
of the criteria is being met.
Okay, very good. What about GFG?
It's not mandatory because it's unlisted private company and criteria is not made. So
Okay,
The
great.
turnover is not more than 200 crore and outstanding is also is not more than 100 crore.
Correct.
Loan.
So let's revisit the criteria for unlisted company. The criteria was share capital for, let me just highlight this part. Share capital of 50 crore or more, turnover of 200 crore or more, outstanding loans or borrowings of 100 crore or more, outstanding deposits 25 crore. Okay. So now, if any of this criteria is met, internal audit will apply. Yeah. So please remember it says or. So you don't need to check all the four. Any of them, then the internal audit will be applicable. Okay. So now in this case, if you look at M&M, company is having 60 crore as the equity share capital, which is exceeding the prescribed limit of 50 crore. So that's why internal audit will be applicable, right? I think Mr. Saminathan, yes, you have a query? Yes, Saminathan.
Sir, in case of paid up share capital,
Right.
under the turnover during the preceding financial year, means it's the end of the financial year or any time during the financial year, sir?
See, turnover is for the company. Okay. Turnover is for the company. Turnover is for the year. So for turnover, it's not relevant.
No. I'm talking about for this matter, paid up share capital, we have to look into the end of the financial year.
Yes. Why? Because yes.
My query is that during the preceding financial year is mentioned. That is what my question is.
Right. So that's why I'm saying. So if you look at point number 3 and 4, they are specifying at any point of time during the preceding financial. At any point of time during the preceding financial. Okay. So that's not what you have in case of paid up share capital.
Okay, sir.
Clear?
Got it.
Okay. Next. Now, for the private company, I think for private, there's a dilution. So idea is, not to include many as a mandatory requirement. So what is the criteria? Turnover, 200 crore. Or outstanding loan, 100 crore. Okay. Here again, it says or. Means if any of this criteria will be met, so the internal audit will apply. So now let's go back to this table. So do they fall into any of this criteria? Turnover is lower. Loan is also lower. Okay. So that's why for GFG, can we say internal audit is applicable? Answer is no. For GFG, internal audit will not be a mandatory requirement. But if let's suppose GFG wants to get the internal audit done, will that be permissible?
Yes, sir. They can appoint.
Yes.
It's optional.
Correct. It's optional. Okay. So if let's suppose Companies Act criteria is not applied, don't think that it's A company cannot do that. Okay, it's something which the company can always do. Okay, now next question. Rishi is appointed as internal auditor for SOM. It's a medium-sized manufacturing company, while CA Nitin is the statutory auditor. Okay, Nitin is statutory auditor, Rishi is internal. Now, during the review, Rishi means internal auditor notices several discrepancies in the disbursement records and suspects there might be weaknesses in the internal control system. Additionally, there have been recent changes in the company's business policies that he was not informed about. Rishi is concerned about maintaining his independence and objectivity while ensuring that management is aware of these issues. So first question, what are the responsibilities of Rishi as internal auditor with respect to accounting and financial records? So that's one. Okay. Further, statutory auditor Nitin has asked Rishi to provide direct assistance. Now, direct means, let's understand what's the meaning of direct here. Direct assistance regarding evaluating the appropriateness of management's use of going concern assumption. So it seems statutory auditor is planning to involve the internal auditor in his audit procedures. Okay, so he is trying to make the internal auditor as part of his audit team. Appears to be like that. Yeah. Now, as per the requirements of auditing standards, which will apply to the statutory auditor, whether the statutory auditor can ask such direct assistance. Over to you. What do you think? Yes.
As per 610, he can ask.
Okay. So if he can ask, so can he ask the internal auditor to perform this evaluation of appropriateness of management's use?
No.
No, sir.
Okay.
No, sir.
No, sir. Answer is no, because
Going concern, he can't ask for this direct assistance. He can't take this direct assistance.
Right. So that
sir, actually,
means
the reason is that it's a internal auditor is between the internal auditor and management.
Right.
He is working for the management, not working for the auditor.
Correct. Very good. So now when it comes to the statutory audit is a third party who has been appointed by the management. Okay. And they are required to perform their work themselves. So that's how we need to look into it. I'm just trying to give you a general perspective, not what the auditing standard requires. If let's suppose direct assistance is taken, whether it's direct or indirect, in both the cases, expressing an opinion will continue to remain the responsibility of CA Nitin. Yeah. Yes or no? Okay. So this responsibility cannot be passed on by the statutory auditor to the internal auditor. Okay. Now, on this first part, can you tell me what are the responsibilities of internal auditor in this situation? Over to you.
Management should communicate each and everything in the transparency manner to the internal auditor.
Right.
It's a
okay.
However, the responsibility of the internal auditor, he can go and verify the transaction and everything. If he found any differences between the policies, he can discuss with the management. These are the issues found, and he has to discuss it.
All right. So now let's look at the responsibilities of Rishi.
Compliances of the policies and procedures are in place is the function of internal auditor.
Correct. Very good. So now all the responsibilities which we discussed will continue to remain the responsibilities of Rishi. Now, what were those things that we discussed? We talked about internal control system for that. Okay. Now, whether that is related to accounting, whether that is related to anything, auditor has to look at, means internal auditor. to operate independently of accounting staff. Of course, independence has to be there. Not to involve in performance of executive functions. To observe the facts and situations and bring them to the notice of relevant authority. Yes or no? Yeah. And to maintain the independence. Correct? Yeah. So whenever you have this question, so these responsibilities you'll have to put down. Now, as far as the statutory auditor is concerned, okay, so the expectations which he is having. Now, statutory auditor has the sole responsibility for audit opinion. That is the most important part we need to understand. Okay, for doing that, a lot of procedures will be planned by the statutory auditor. We are not getting into those procedures. So he thought about one procedure, he thought of involving the internal auditor. Can that be done? Answer is no. Statutory auditor cannot ask direct assistance from the internal auditor regarding evaluating the appropriateness of management's use. That will be inappropriate. Yeah. Okay, next question. CA Sanjana has recently joined as Chief Internal Auditor of Upscale Limited. It's a listed company. Her subordinate staff in the internal audit department brings to her knowledge many prior audit issues highlighted in the previous internal audit reports, which are still open. Oh. Does she have any responsibilities in this regard? Number one, how should she proceed in this situation? Over to you.
The follow-up
Yes,
is a part of internal auditor. So she has to take up the follow-up of the previous reports and the corrective actions which were required and the highlighted areas which were brought to her, which were there in the previous reports, and what actions have been taken.
Correct. Anyone else?
Yes, sir. Yes, sir. The responsibility is with them only by the internal auditors, and also they need to maintain the action taken report. They have to prepare it, and it's a responsibility is with they need to follow up with the management to rectify all the things, and they have to clear it. And also, every subsequent report they have to mention what action taken, how it is clear, what is pending. Also need to be mentioned it.
Correct. Anyone else who would like to add to this? Anyone else? No? All right. So now, please understand that in this case, CA Sanjana is the Chief Internal Auditor. Yes or no? Yeah. As a Chief Internal Auditor, she will be responsible for continuous monitoring. Now, continuous doesn't mean daily. Means a monitoring has to be there. Monitoring means you need to monitor whether the point or the activity which was required to be done, whether that has been done or not. So in this case, what is the activity? There were some issues which were raised in the previous reports. For those issues, some action plan would have been prepared and some timelines would have been set. Okay. But if those issues continue to remain, the effectiveness of those previous years or those previous audit reports will go down. Otherwise, what is the use of internal audit? Yes or no? Yeah. So that's why she will be responsible for continuously monitoring the closure of those issues. So how should this be done? There has to be a process in place for monitoring. Yeah. Which has to be agreed with the management. Of course, why? Because the management, it's something which is related to the organization. Yes or no? It's something which is related to the organization. So that's why everything has to be discussed internally. Who is going to do what? How will that be done? And what is going to be the time frame? So maybe even if the timeline which was mentioned in the report is now gone, a new timeline needs to be set up. So one is what the auditor had discussed and the management had agreed, but if let's suppose that has been they failed to achieve that, they need to reset. Yeah. So if they fail to achieve, doesn't mean that it will not be done at all. So you need to revisit that. Okay. So the responsibility to implement the action plans remain with the management. Monitoring and reporting will be the role of Sanjana as the Chief Internal Auditor, is usually in the form of action taken report of previous audits. Right? Now, she should review whether follow-up action is taken by the management on the basis of previous reports as well as her report. If no action is taken within a reasonable time, she needs to escalate this. Okay, where the management has not acted upon suggestions, not implemented the recommendations, she should also understand if there are any challenges, if there are any problems. Many a times what may happen is that maybe the concerned department is trying hard, okay, to fix the problem, or maybe to set up or to follow or to implement the recommendation. But there are some challenges which are involved, which are taking time. Maybe initially they agreed that within 1 month we'll be able to do this. But 1 month they've not been able to do this. Why? There are some more challenges. Many a times practically you don't think through so much, or you're not able to think through. Okay, so that's what you get to know once you get into those things. Yeah. So she needs to also ascertain the reasons. So it's not that anything which is written has to be followed as it is. If there are some challenges, those need to be revisited, and the revised timelines then need to be set up. Right? Next, STU and Associates are the statutory auditors of this company, which is listed First and Last Limited, which is operating in petrochemical industry for the past 3 years. CAK is the engagement partner, and CAK had designed certain substantive procedures on some selected assertions in response to assessed risk of material misstatements for the year under audit. These assertions were not examined by him in previous years due to materiality or risk considerations. Mr. X leads the internal audit department and reports to audit committee. During the audit, a senior member of the engagement team means the statutory audit. Okay, so this engagement team is the statutory audit team. Yeah, so senior member decides to engage Mr. X to provide direct assistance in performing the above substantive procedures. Above means this one. Okay. You are required to comment, okay, as to whether you find this appropriate or not. And if you have any thoughts on this, also indicate the activities to be performed by a statutory auditor prior to using internal auditor for providing direct assistance. Over to you. Tell me, what are your thoughts on this? And of course, if let's suppose that direct involvement is required, then what needs to be done by the statutory auditor? Yes, quickly, over to you.
He needs to check the statutory auditor before engaging, needs to check whether there is any threat to objectivity and whether there is any prohibition of law and regulation before engaging the internal auditor as a direct assistant.
No, so so you're saying that for
Before
involvement of this direct assistance, you are saying for this particular activity to be performed.
Yes, and then he will check whether the use of the direct assistance. He will use his professional judgment, planning and performance, the audit work, evaluating the audit evidence, extent to which that evidence will be required, assessment of risk of material misstatement. All these will be done.
Okay, very good. Anyone else would like to add to this?
Sir, for the internal auditor, the main task is to the to check the effectiveness of the internal control on the risk assessment process and to enhance the governance and the objectives of the management. That's the primary objective of the internal auditor.
Right.
But however, in this case, particular case, the statutory auditor taking the direct assistance directly, but is the opinion to provide the financial statement is the primary responsibility of the statutory auditor.
Right.
He has to provide the reasonable assurance on that cases.
Correct.
However, in this case, he is taking the assistant from the direct assistance from the he can take it. However, the work performed by the other internal auditor, he has to do the procedure, substantive audit procedure as specified in the SA 610. He has to perform and accordingly he need to report it.
Okay. And if let's suppose this engagement is required, so is there any formalities which statutory auditor needs to perform?
Statutory obviously need to check with the management as well as the internal auditor concern. You need to check it before asking the help from them.
Correct. Very good. So let's look at this. Now, when it comes to internal auditor, okay, external auditor, okay, so of course, if he wants to engage him on various activities, this needs to be evaluated. When the engagement partner is designing certain audit procedures, so what is the thought process? It is also specified that those assertions were not tested by the audit partner in the previous years due to materiality or risk consideration. So there was not an error. It is being done now for incorporating an element of unpredictability in the audit procedures to be performed as the individuals within the company who are familiar with the audit procedures normally performed on engagements may be more able to conceal the fraudulent financial reporting. So it's a good step, yeah, to bring in an element of surprise, something which was not done in the previous year, now he's planning to do. So that the people are not thinking that auditor will come and perform the same procedure over and over a period of time. That's how the opportunity for committing fraud may also be created. Now, when it comes to the internal auditor, to provide direct assistance in relation to such matters, it could be counterproductive and defeat the very purpose of designing such substantive audit procedures. Hence, this consideration by the senior engagement member to use Mr. X to provide direct assistance doesn't seem to be appropriate. Further, when it requires any involvement, okay, let's suppose any sort of involvement is required on the part of internal auditor. So what are the formalities sort of? Obviously, this has to be authorized. Yes or no? Yeah. Because if you are planning to engage someone, so obtain written agreement from an authorized representative of the entity that internal auditor will be allowed to follow instructions of external auditor. Because then he'll be playing a part of team member of the statutory auditor. Okay. And then entity means the company will not intervene in the work of internal auditor. Why? Because entity should not intervene in the work of statutory auditor. So internal auditor is nothing but a part of statutory auditor only. Obtain written agreement from internal auditors that they will keep such matters confidential. Yes or no? Yeah. So only and only when these two things are in place, these two can have some sort of direct involvement. Clear? All right. So moving on to next one. Management of I Limited is concerned with the reporting requirement related to audit trail. Audit trails may be enabled at the accounting software, depending on the features which are available in respect of such software. Consequently, management of the company approached CAJ and asked him to suggest a list of internal controls which may be required to be implemented and operated to demonstrate the audit trail or audit log feature was functional, operational, and was not disabled. So tell me, what are those controls which need to have in place for this implementation, operation to demonstrate the audit trail? Over to you quickly. Just think
Sir,
about it.
first the audit trail, any changes the data, including the creation of new data, updating or deleting the existing data may be recorded in full aspect. What date is deleted, when deleted, who deleted, all these things to be captured in the audit trail. However, in terms of the control aspective, that the delegation of authority to be created and the segregation of duty done, who is deleted, who will have the power to delete it, who has the power to modify the data, and who has created the data, all these things to be written and to be agreed with the each and every department, say purchase department, sales department, and accounting department, and all the department they should have a separate DOA and separate SOD. And accordingly, the audit trail also should ensure that audit trail itself should not be deleted. For that also, no one has to be the access to that.
Yes,
This kind
very
of
good.
assurance to be given by the IT department.
Correct. Correct. So now, if you look at some of those internal controls, okay, so that will be to ensure that audit trail feature has not been disabled, to ensure user IDs are assigned to each individual so that this tracking can be done, and those user IDs are not shared so that one can remain accountable, to ensure changes to the configurations of the audit trail are authorized. Only then somebody can get it done, otherwise not. Logs of such changes are maintained. To ensure access to the audit trail is disabled or restricted. Very, very important. Otherwise, anybody can go and change that, delete that. To ensure periodic backups of audit trails. For any IT related environment, backups play a very, very important role. So that's why that also need to have in place over here. Correct? Now, one more question. All right, so next. UV Limited is a large MNC with a global outreach. Due to the voluminous business, it has in-house internal audit function to monitor day-to-day operations. LK and Associates Chartered Accountants, they are the statutory audit. Since the company has large-scale operations, there is limited time to perform statutory audit. So the engagement partner CAL decides to take again direct assistance from the internal auditor for certain areas of audit. CAL assigns audit documentation part to one of his audit assistants and instructs him to do the requisite documentation of working papers. Further, he tells his audit assistant not to document the working papers prepared by internal auditors who directly assisted them, as it does not form part of statutory audit. Okay, now this part is very, very important. Not to document working papers prepared by internal auditor, as it does not form part of statutory audit. Is the engagement partner right in excluding the working papers? Number one. Guide him as to the matters to be included in audit documentation in this scenario. Over to you. Tell me.
Sir, in this, definitely that external auditor, statutory auditor should include the internal auditor documentation as well, because he also performed and used his work. And that part of the auditor. And also they need to maintain the document. They have to prepare all the evidence of documentation within 60 days from the finalization of the accounts. And they have to maintain and keep a record for 7 years.
Yes. So that's about the archival, is it?
Yes, sir.
Okay. Anyone else would like to add to this? All right, so let's try to understand. See, the external auditor shall include in the audit documentation 1. Evaluation of existence, significance of threats, okay, to the objectivity of internal auditors. Level of competence of internal auditors, again, very important. Basis for a decision regarding nature and extent of work performed by internal auditors. Who reviewed the work performed? Again, very important. Written agreements, something that we discussed in the previous question. This has to be the part of documentation. Including the working papers prepared by the internal auditors. Why? Because if you are getting some audit work done, that has to be the part of documentation. How can the statutory auditor exclude that? Otherwise, the work which the internal auditor who has done, if the documentation is not maintained, will that be considered to be done? No, that will be considered as if the work is not done. So therefore, in the given situation, okay, when the engagement partner instructed his assistant not to document the working papers, okay, yeah, so this aspect is not correct. Okay, so this aspect is completely incorrect. Yeah, so one, auditor is of course required to document something that we just looked at. Secondly, if you get this deleted, so that is something, a deletion of the audit documentation. Okay, the evidence which you obtain as an auditor is deleted. Yeah, so that is not appropriate. Okay, clear? All right, so I think with this, we are through as far as these two topics are concerned. And before we wind up our discussion for today, any questions, any doubts that you may have, let's discuss that. Over to you. Any questions, any doubts if you have?
It's clear from my side, sir. Thank you so much for your support and help, sir.
Great. I think if you do not have any further questions, then we can just close this. Thanks everyone for your time and for this wonderful participation today. Thanks so much, and we'll continue with this, sort of revisionary aspects in the subsequent sessions as well. Thanks.
Thank you.
Thank you, sir.
Thank you.
Thank you, sir.
Thanks. Ashok, we can close this now. Thank you.